Hi everyone and welcome back to this week's video diary. A really busy and quite strange week this week, to be completely honest with you, with respect to everything that's going on. So, was down the road for the vast majority of the week, 500-600 mile drive each way, and got back quite late last night, and we've just been out and about. I've been out with the youngest today, doing some other odd jobs. So only really just had the opportunity to sit down and collect my thoughts for what I'd like to talk about this weekend, and there are other things that are happening tomorrow and Sunday for me. So today it's Friday video day, as opposed to perhaps what you've been getting used to over the course of the weekends. So I'd like to talk about two or three different things today, actually. The first one is, I guess, a response to a couple of questions that I've had perhaps over the last few weeks, both on X and some of the other platforms that I have a presence on, and also in conversations that I've had with a number of different organisations that were in the process of collaborating with a view to rolling out support for the work that they're doing. And I alluded to, I think it was last week, that there's some really exciting conversations happening over the next couple of weeks and throughout May, certainly, to see how we can best support those organisations. And one of those meetings, quite a big and important meeting for me, certainly in that space, is next week, and I'll keep you updated as to how that goes. And that question, though, that we were talking about was, but what is your channel doing, and what is it that you're trying to offer? Because you're not necessarily working in the finance space in the same way that perhaps other content creators, influencers and such the like are. And it's a question that I guess I've pondered myself quite a lot this last few weeks, and certainly when I first came back online, it was about talking about the release of the book, and really the channel is, or channels, because for those of you that don't know, we've also got a presence on Facebook and YouTube, has grown quite considerably from there. And I guess, what am I trying to offer now? What I'm trying to avoid doing really is getting down into the detail of how things work too much. I like to try and keep it in bigger handfuls. There are some fantastic channels out there, especially ones that I interact with quite regularly on X, with respect to things like side hustling, cashback, all that other stuff. And I would commend those channels to you because they cover it far better than I ever could. But I guess what I'm trying to do is zoom out a little bit more. And I'm trying to say, hey, there are lots of different factors that affect personal finance from a macroeconomic perspective, and your broader interaction with the financial system. And yes, of course, you need to know how some of these products work, but you also need to understand how the system works, and you need to understand and be able to appreciate the factors that impact on finance globally on a broader scale, I suppose, ultimately, so that you can understand that context and you can then drill down into that on a practical level for you and just make better decisions. And that might therefore mean that after you've absorbed that more broad general information, you want to find out some more about cashback, side hustling, investing, whatever. And clearly we talk about some of that, but there are lots of other channels out there that I would absolutely recommend to you to go and find that really good quality information. So I guess that's really what I wanted to get out there for the first part of this. But I also wanted to talk about perhaps a bit of a cultural issue in the UK with respect to talking about money and borrowing products for young people. So for context then, parent, eldest is 19 years old now, and I wrote, I think it was last week, perhaps the week before, about how we had signed him up, or helped him sign up rather, for his first credit card and overdraft. And it was really interesting to hear a really mixed review from people, both online, although what I would say is that, particularly on X, the online feedback was quite positive. There were other people that got in touch privately or through the other channels that were perhaps less keen, shall we say, with respect to this being a good idea in their opinion. And I thought that was really interesting, actually, that just how what was actually quite a simple thing generated such albeit not directly, generated such hot topic of conversation. And I thought this was perhaps a really good idea for me to unpack it a little bit more about perhaps why we did some of the things that we did, and then just talk very broadly about how these products work and how we taught him about these products working, with a view to then putting that and panning it out in the detail in a couple of articles later next week. So the reason we actually chose to do it was because he's 19, he turned 19 in April, at back end of April, and has worked part-time for probably since he was about 16 and a half, 17, maybe slightly older. Works at a local business, and that's fine. I think it's really good for him to go and learn all the things that you learn by virtue of being a young person in the workplace, right? There's lots of second, third order benefits beyond just going out and earning a wage. But a couple of months ago, the company that he worked for was taken over by another business, and although they made a commitment to keeping all the staff on and to keep the business open, essentially same company just under new management, they changed the pay structure around the business. So what that means then is that he went from a weekly pay packet to a monthly pay, and this month is the first month that he is being asked to make his money stretch for the entirety of the month, as opposed to getting paid every Friday like how he was used to. Now, being a young person, clearly he wants to go out and he wants to do things, and he's signed up for a number of membership subscriptions. Nothing crazy, and I'm not suggesting for one moment that he's been irresponsible with his money, because he hasn't. He's got a gym membership, pays his car insurance, that kind of things. Absolutely not massive levels of money, but it was the way that he was accumulating his income was changing in a way that he was perhaps not used to, and that meant that he got himself in a little bit of a pickle. And he had some cash. He went and put it in the bank to cover those bills. But then we sat down and said, hey, well, this feels like a really good time now to have a conversation about things like credit cards and overdrafts. And before I go into that a little bit more, I think it's perhaps worth just explaining that I am not necessarily an advocate of you should borrow money, leverage it up, balance and juggle debt. Equally, I also try and be very impartial in the sense that I also try and avoid the debt is evil mantra, and you should avoid it at all costs. There are channels and pages, some very popular, out there that will advocate quite strongly in either direction in terms of like do not do anything with debt, don't touch it. Equally, they will turn around this other pages and they will say about the benefits of borrowing and using that debt to fund other growth and investment opportunities. For me, I think that's quite simplistic. I don't think anybody really genuinely chooses to take on debt, but I guess the way I approach it with respect to the teaching that I do with people is that sometimes debt is a necessary evil, and I have a personal view on debt. I try not to share that too much. But I guess from my perspective, it's important that I recognise that a lot of the people that I'm interacting with, some have a really strong position that they're anti-debt. Some people live in it, and it's just it's a normal part of, for them. It's a normal part of their life. Credit cards, overdraft, loans, whatever. What am I saying? I'm not judgmental. I like to work on the facts of the matter, as opposed to living in the ideal world, and that's perhaps how some of these other pages work. So for him, our eldest, it was really important that we had a conversation about some of his options, because it was quite apparent that irrespective of your personal position on debt, he would have run out of money before the end of the month, come what may, because ultimately, you can cut right back, but basic things cost money, and you can't do something with nothing. And at that point, clearly we're either lending it, or he's got to go and find a way to get it somewhere else. And so we decided in the end to sign him up for an arranged overdraft and a credit card. So what did we talk about with him? I think the first thing that I wanted to stress to him was that perhaps culturally there's a bit of a misunderstanding around both products. I think particularly for younger people, and I really hope that this is taken in the way that it's intended now, is that people that are perhaps less used to having money available regularly, when they find themselves able to spend on a credit card with potentially quite a healthy credit limit, or they get access to an arranged overdraft that they perhaps weren't used to having, it becomes really, really tempting to go out and spend that money quite quickly, because it almost becomes the free money tree. Perceptually, there's just something that clicks in a particular way in their mind, and they feel they need to go out and spend that money. We had a really long conversation about what these products are not. In other words, with respect to the credit card, for example, this is not the free money tree. This is not something to go out and just spend because it's there to be spent. This is essentially a rolling product that is there to say, hey, in the interest of sustaining your cash flow, particularly as your pay situation changes, this is something that, as long as you do it right, and what do I mean by that? You spend within your means. You don't take cash out of an ATM, for example, using the credit card, and you pay the balance on time and in full. It becomes a really healthy way to make sure that you never run out of cash in a way that you might do if you didn't have that credit available to you. And interestingly, of course, something like a credit card might be something that you perhaps need even if you do have quite a significant amount of cash. So what do I mean by that? Well, let's play a scenario out now. You take your car to the garage, for example, or you're driving down the road rather, completely normally, and unexpectedly the car breaks down, takes it to the garage. It's a simple but relatively costly repair, and it needs to be fixed, otherwise the car's not getting back on the road. But no, if you don't pay for the work, you're not going to get the work, and that's not uncommon for what people come across on a relatively routine basis. That's a normal life interjection. Now, you might have the money, you might have thousands and thousands of pounds saved in a savings account, but some accounts are not instant access accounts. If you have the premium bonds as your primary savings product, for example, and again, I'm not saying that that's where you should put your money for savings. I'm saying it is an option that a lot of people use. It's probably the most popular savings product out there. Doesn't mean it's the best one, but it's one of the bigger ones. You can request your money out, but it might take several working days to receive that money. Do you want to not fix your car for that time? Do you want to not go to work? Do you want to not continue to earn? Or are you going to pay the garage on the credit card, withdraw the money out of the premium bonds, and then in time for when the statement is due, use the money that you've taken out of your savings account that's arrived in between now and then to then clear the balance? That's perhaps the way I would explain to people to use it for a one-off large expense. But clearly the other way that you can use it quite sensibly, and to be honest with you, quite healthily, if that's what you're inclined to do, is to use it as that cash flow product that allows you to sustain your income and expenditure, especially if you've got maybe variable income. But the most important thing is, you're always going to be able to pay your bills, you're always going to be able to put fuel in the car, buy a bit of shopping, whatever it is. But you're making sure that there's enough money either through your income or through your savings to clear the balance in full. And if you don't clear the balance in full, you end up paying interest on the credit card. Even if you make a partial or a significant payment towards the outstanding balance, if you don't clear it in full, you usually incur interest. And that can be quite expensive. And I recognise that sometimes people just do not have the money to pay that balance in full. But unfortunately, at that point, you start to rack up interest, and then perhaps we need to have different conversations about, well, what can you do, what can't you do to make sure that you're paying as little interest as possible. But for me, they were the golden 3 rules with respect to the credit card. Spend what you can afford, don't take cash out, pay the balance in full, and you'll be fine. Next one was of course the overdraft. And again, people have a real love-hate relationship with overdrafts. They would teach you that it's the mother of all debt traps, it's super expensive. However, yes, they are expensive comparative to other borrowing products, but perhaps the the perception around overdrafts is a little bit more outdated nowadays. So some banks and building societies will give you an interest-free overdraft. Not all of them will. I think you've got to be quite lucky in reality if you're going to get that. But the days of a fixed fee per transaction, for example, or a fixed fee per day of being in your overdraft have long since gone. And then arranged overdrafts, unarranged overdrafts. So eldest is going to work, giving him a wave. You must know what we're talking about. Him ears are burning. So what was I saying? Around 6 years ago, in around 2020, the rules changed with respect to overdrafts. So to summarise that bit of waffle just there then, historically, there was an arranged overdraft and an unarranged overdraft, and the funding structures around both products were very, very different potentially. And that meant that if you had an unarranged overdraft, you could have been charged considerably more. What you tend to see now is actually just a flat fee. So in other words, the bank will either charge you the daily rate, overdrafts are accumulated and costed daily, or they just will refuse the transaction to go ahead. But again, in reality, go back to that example that I gave you there. You have an unexpected cost for a couple of days, which is going to take the balance below zero. You might, for example, choose to use the overdraft facility on your current account. And again, it's impossible to generalise. Sorry, it's impossible to give specific guidance about what is better for individuals sat here with everybody wherever they are. You know, everyone's lives are different, everyone's circumstances are different. In terms of, should I use the overdraft, should I use the credit card, should I do something else? Look, you know, the most important thing for me is that you understand how these things work, and therefore you make the decision based off what is best for your personal circumstances. But you can't do that if you're going in with your eyes shut. So the way we explained it for him, a short-term borrowing solution, you pay interest daily, or you don't pay interest daily, but the interest is accumulated and charged daily, usually settled monthly. It can be quite expensive if you sustain the overdraft, but in reality, for a relatively small overdraft that you use very infrequently, you're going to be paying relative pennies for some of the costs. And actually, you know, when you think about how much it might cost for borrowing £50 to £100 for a couple of days, the few pence, and it probably will be a few pence at that kind of level, is a really affordable way to get peace of mind that you're always going to be able to meet your costs no matter what your cash flow situation. I thought that was really interesting and important to get out there, because I think culturally in the UK, we as people, we're quite closed when it comes to talking about money. We as parents are maybe reluctant to talk about it with our kids. And I know that some people will jump out there and say that there's financial education in schools and whatever. But the harsh reality, guys, is this. Far too few an adult knows enough about their money and about how the financial services and products work in this country to make consistently good and informed decisions. And that often means that they find themselves in situations that they don't want to be in and not really knowing how to get out of. And if we don't arrest that problem and we don't set the younger generation up for success, we're never going to fix this, and we're never going to get out of that hole, and we're never going to change that culture. Ultimately, for me, I think that means we've got to start talking about money a little bit more openly, in a way that people my age and certainly people that are older than me are, generally speaking, perhaps not used to and less comfortable doing. But hey, if you keep doing the same thing and expect a different result, it's a bit of a definition of insanity, isn't it? So what am I saying as a takeaway today? I hope you found that a bit of useful context with respect to what the channel is about more generally. It's about talking about some of that bigger picture stuff before then drilling down into the practicalities of how the products work in very general terms, so that you as an individual can make the best possible and most informed decision relative to your personal circumstances. It's about giving you that broad and that general understanding so that you know what you're doing and you're less likely to make a poor decision when it comes to your personal finances. Second part, I think we need to start having some serious conversations about money with each other, with our friends, with our families, especially with our kids. We owe it to them to set them up for success. And that means we've got to give them the skills and the confidence and the competence, most importantly, to make sure that they are making the best possible decisions when it comes to their own personal finances. That starts with really frank and honest conversations about money and borrowing products. We have to show them that this is out there. This is a necessary evil, and this is not going to go away. It's nothing to be afraid of if you understand what you're getting into. Take some time to sit down with young people, show them this video, show them the books, show them the articles. Use this channel and material however you want to make sure that they set themselves up for success for the long term. I hope you found that useful. I'll put some of that into the articles that are going to come out later this week, particularly around the borrowing products and that kind of national conversation about money. That's something that I feel really quite passionate about. Hopefully I've got some updates for you in the next few days, next week or two, about some of these conversations that are going on with the larger organisations. But hey, money and people have really different relationships, right? And my relationship with money is going to be different to your relationship with money, which is going to be different to the person next to you. For me, this is all about giving people that engage with this channel the opportunity to ask questions and broaden their understanding. So if there's something that you want to hear some more about, you've got questions, maybe you agree with what I'm saying, maybe you don't, I welcome all of those thoughts, questions, comments, queries. Send them to me, send a DM, get in touch how you want to get in touch. I'd love to unpack it with you some more. And I'm really happy to go and explore and put together either videos or explainer articles about things that you want to hear some more about. That's genuinely really, really important to me. Because what matters most is you're getting as much out of this channel as you can so that you can put yourself in the best possible situation just to get ahead and stay ahead in life with a little bit of confidence and maybe a good night's sleep around your finances. That's all from me. It's another busy weekend this weekend, so you're probably not going to see very many posts, but please stay engaged with the channel. Get in touch. Let me know what you think. Let me know what you want to hear. And take care. Look forward to speaking to you again next week.